Coming to live from the campus in the International Conference Center, and it's a beautiful Saturday evening right here. We think it's very appropriate to make a recap on what is happening, especially with the government support programs towards the agricultural sector. And there is a major facility which was issued up and started up by the government through the Bank of Uganda called the Agricultural Credit Facility. And we're going to discuss about its progress and the prospect of this very project. Let's have an introduction, then we'll be right back into the studio discussion.
Financing is a major barrier to growth in Africa's agricultural sector, particularly when it comes to smallholder farms. Interest rates in several countries are extremely high, up to 47%. Farmers and businesses often lack collateral, and banks struggle to price the risk of loans to smallholder farmers and small to medium-sized agribusinesses. Less than 3% of total banking lending in Africa goes to a sector that accounts for about 70% of all employment and over 40% of the GDP. The government of Uganda, recognizing the fact that 73% of its population is consistently employed in agriculture, identified the agricultural sector as one of those sectors with the greatest potential to reduce poverty and to significantly contribute to the overall economic growth of the country. The agricultural sector is among the top government priorities for increased public investment since the financial year 2009-2010. To mobilize the required sources for increased growth and productivity in the agricultural sector, hitherto perceived by financial institutions as risky for lending purposes, government in 2009 signed a Memorandum of Understanding with the participating financial institutions, or PFIs, which initiated the Agriculture Credit Facility, ACF. This was intended to facilitate the provision of medium and long-term loans to projects engaged in agriculture and agro-processing on more favorable terms than are usually available from the PFIs. The ACF terms of condition have been amended progressively over the years, with the latest Memorandum of Agreement signed in June 2018, where the government of Uganda makes an annual contribution of 30 billion Uganda shillings to the revolving fund. Commercial banks contribute 50%, and micro-deposit taking institutions, or MDIs, and credit institutions, CIs, contribute 30% of the capital value of each loan to an eligible borrower. The implementing agencies are Ministry of Finance, Planning and Economic Development, the Bank of Uganda, and participating financial institutions, or PFIs. However, the scheme for quite some time has been facing increasing criticism to the point of being deemed right now as inaccessible, over-commercialized, highly interest-rated, and non-functional. As a way to address the criticism and skepticism raised against this scheme, NTV, in conjunction with the Bank of Uganda, have teamed up to comprehensively provide the true picture and the status of the Agricultural Credit Facility, its successes, challenges, and future. You're welcome.
And indeed, Karaga Boardings is my name, and delighted that you're making us as your #1 station, NTV. And on our social media platforms, we've posted a question asking you about this very facility, whether you think it's actually helping out the ordinary farmer. And just about 3 responses, as I said them before we get into the actual studio discussion. I see Utman Kalunji says that I don't think so, maybe those owning matoke plantations in Singiro and Mbara, then are they still registered animals? Okay, I think that's a bit digressive. It's a big no, because a farmer in the village doesn't know about banks, and these loans are to be accessed through banks. Then lastly, Adomati, he says that national funds given out based on party color always fail. We've seen this happen again and again, and please keep your responses coming. Bank of Uganda and the government of Uganda is listening to make sure that they give a proper response to this. Thanks, ladies and gentlemen, for joining us.
Thank you.
And at the extreme left, I have Dr. George Sonko. He's the head financial consumer empowerment, Bank of Uganda. Welcome, George.
Thank you, Baldwin. Good evening, viewers, and hope we shall have a very constructive discussion around the SCF and, of course, other issues that we deal with at the Bank of Uganda.
I believe so. Yeah. Other issues? No, yeah. We're sticking to SCF. And next to me, strictly rather on my right, is Joanita Bumba, the head agricultural credit facility, Bank of Uganda. Juanita, you're welcome.
Thank you very much,
Yes.
Baldwins, and good evening, viewers. I hope we're going to have a good time engaging.
Absolutely, and right on straight to you, because the concept of this particular facility is that the main objective is to promote the commercialization of agriculture through the provision of medium and long-term financing of capital investments in agriculture and agro-processing.
Yeah.
Then the government itself makes an annual contribution, and then you have commercial banks and you have PFIs, as we have given the introduction. So what was the rationale? The reasoning behind getting to have this facility set up to this effect?
Okay, thank you very much once again. To answer your question about the rationale, I want to mention some key factors that form the backdrop or environment in which the agriculture credit facility was established. One of them, as we all know, is that agriculture is a key pillar of our economy. The National Development Plan recognizes agriculture as the backbone of the economy, and it prioritized agriculture as one of the key sectors for investments. We know it is a critical driver for economic growth, critical driver for poverty alleviation, for also job employment creation, because we all know that about 87% of the working population in the rural areas, they engaged in various agriculture activities. So that is the issue. Then it contributes to about, like, I think 23% of GDP
Yes.
is accounted for by agriculture. Talk about our foreign exchange
Which
earnings.
is an irony that the
Yes.
biggest employer sector is contributing quite
That's
a
small,
minimal.
exactly. And then when it comes to the foreign exchange earnings, agriculture accounts for about just 20%. So with that in mind, and the issues of inadequate financing going towards agriculture through these banks and participating financial institutions, they also had their problems. They had their problems in that they were risk averse to lend advance credit to the farmers, because the farmer is in that sector, agriculture sector, which is exposed to a covariant of risks. And this was, you're talking about climatic changes, you're talking about post-harvest issues, losses. You are talking about issues of the volatility, fluctuation in the produce, the agricultural produce, whether it is on the local markets, regional markets, international markets, volatility in price. Then you're talking about those risks entailed in the market linkages, amongst others. So you find that because of these high risks, this plethora of risks, the appetite for these banks to only lend to agriculture was suppressed. You understand?
Yes, the banks have a high sensitivity towards
because of the risks entailed that I've just mentioned. And then you
which
find
at
that
times sounds selfish, because we would expect that they're supposed to pay.
well, so I mean, everything. We're in a commercial world, so you have to
Capitalism.
think about yourself.
Yes.
And then the other issue is that if they are to own lend to agriculture, the own lending was at high cost of funds, which has to factor in the risks I've just mentioned, which has to factor in their transaction costs. So, given this scenario, this backdrop, government in 2009 said, I think we need to step up, increase production, look into the commercialization of agriculture. And that is why the SCF was birthed in 2009, basically to bridge the financing gap in the agriculture sector. Okay?
Yeah, and definitely along the way I'm going to ask whether this very objective has been obtained.
Yes.
Because the very essence of which you set up the facility to ensure that you enhance credit access seems to be quite ineffective at the moment, but you give your defense on that. Let me first get to George. So
we'll have the conversation.
The terms that you've set over this SCF is that the interest chargeable by the participating financial institutions, PFIs, is 12% per annum, while working capital for grain trade, which is also going to be an exclusive discussion about this very facility. Grain trade does not exceed 15%. The facility fees charged by PFIs not to exceed 0.5% of the credit facility. Do you have terms which are seemingly actually centrally on a commercial banking system basis, in as much as you're saying that the government has come to enhance the credit provision to this farming community? So do you think these are terms that you've set up which seem to be extremely commercial and undifferentiated from the general commercial banking market, do you think they are appropriate and effective to make you realize the objective you set up this facility?
Yeah, I think the terms are really appropriate. We have to look at where the market is, because with the SCF we are saying you are talking about 12% per annum for the what we've come to know as the initial SCF before we moved into the grain facility. If you look at the market average, we are saying that on average the market is going for about 21 to 25% on average. So if I'm giving a loan at 12%, I'm already halfway. I've cut the market by almost 12 percentage points. So that means
because the commercial banks issue those loans at 24%.
Yeah, 24% and above, depending actually on the risk. Because the 24 we're talking about is the average of a person whose risk profile is probably lower. But given our risk profile, as you'll see down in the conversation, you'll see that one of the biggest problems you'll face is that people are highly risky, so even the 24 we are talking about could actually be the flow of, say, that range. So what happens is with given that we are giving out these loans at 12%, it's already halfway. And also the other thing,
so the government input of the about 30 billion, is that the one which somehow fills up the gap of the half of the usual commercial banking?
Yes, yes, that's exactly the way the scheme was designed. That the 12% is supposed to cater for some of the costs that the commercial banks accrue in extending this loan and ensuring that it's recovered. Because what happens is, while the funds belong to the government and the commercial bank and the MDRs and credit institutions undertake to ensure that they do the appropriate appraisal, they do the recovery. So there's a lot of work that goes on and their costs incurred. So the 12% is supposed to cover for those charges that they incur.
So the Bank of Uganda is paying commercial banks to actually extend these facilities to the farming community that you are trying to reach out to. Is that the implication of that particular?
Ideally, you could look at it that way. You could look at it that way, but we shouldn't lose the trend of thought that what is happening in this space is over and above the fact that you'd have gotten this loan at 25-24%. We've actually lowered the surcharge for the initial charges, insurance, and all the rest, the 0.5% you talked about. So you actually see that what we are dealing with is, even if this 12% under normal circumstances just meets the bare minimum of the charges the commercial banks would ideally take. And the reason why we chose to use the commercial banks or pay them, as probably you've pointed out, is because they have a branch network. The Bank of Uganda only has 9 branches across the country. We're talking about guys who have 600 branches. So there's geographical coverage. That's why the person who sent something on Facebook that we're only looking at one region is not necessarily true. That's why we tapped into the commercial bank network to be able to spread across to everybody to be able to access these funds.
Okay, good overview, especially from the start. Let me go for a break, and Juanita, just need you to give more justification for this whole arrangement of this facility, because it seems quite undifferentiated from the banking system, and perhaps that is one of the reasons you might be finding lack of compliance from the people you're targeting. So can we go for a break? Come back and just do more of the justification. Thanks to our viewers. Let's go for a break and we'll be right back to do a more extensive discussion.
To have a complete home, you need good furniture that lasts forever. With quality that beats the rest of the market, Dreamline Furniture, your right partner in this. We have all your favorite furniture ranging from beautiful sofa sets, center tables, beds and mattresses, dining tables, coffee tables, TV stands, among others. Come to Pioneer House opposite Shell Ginger Road, ample parking space available behind the Winton Road.
I saw the end of the election period. I saw the days towards it up to the end. You guys should pray about it.
A time comes when you start waking up and you start realizing that there are higher influences in the realm of the spirit, and to acknowledge that you're not merely physical.
There is not any man, prophet, psychic, whatever you may call them, that has stood in front of masses and has been that detailed and that specific about things year in, year out, and you have seen them before you.
Prophet Elvis Mbonye, the prophet with an unmatched record of prophetic fulfillments.
Coming soon on NTV. A family devastated. Siblings separated.
Julian, ipipilin kasi hali mo ka. Isama niyo na lang po ako. Ate!
Ayos ka lang, bata?
Tulungan niyo po ako.
Ikaw na si Samantha Del Mundo. I want you to meet Governor Salvador Del Mundo.
Huwag niyo po ko ibalik sa ampunan.
Sige, Pilipino. May aksidente po kasi nangyari po dito. Pwede mo kayo pumunta?
Ang natanggap akong caregiver sa Amerika. Hindi ka na mamamasada nun.
Please give a round of applause. Jewelry designer, the star, Samantha Del Mundo.
I like you, Anna. To be honest, I think I love you. Anna's my girlfriend.
The love that makes her whole.
Pagkatapos ng party na to, wala nang mukhang iyaharap ang babae.
Will ultimately destroy her.
I still love him so much. At wala akong balak na isuko siya.
The heart is the deadliest weapon.
Nayaan ang patayin nila ako.
Coming soon on NTV.
Thanks our viewers for joining us. I'm Kaga Baldwins once again coming to you live from the Kampala International Conference Center, and we're discussing the agricultural credit facility that has been set up by the government of Uganda to enhance the need of credit access by farmers, and of course to see how you can reduce poverty in that particular community. And still on that question that we posted on Facebook and Twitter, asking you whether you think this is reaching the ordinary farmer. I can see Amos Chamsi says that ordinary farmers only need market, nothing less, meaning credit is not quite essential. I have a team here to respond to that. And then lastly, just a second, Romero Andrew says no. No. Roland, no, ordinary Ugandan gets a coin of such. People who get that money, they put up mows and arcades using that money. gentleman, and Lady, you hear the skepticism. So, Juanita, you have, of course, as you stipulated, this whole facility has been phased. It's now in its third phase. SCF1, SCF2, SCF3.
Yes.
5.
Yes.
Okay, I'm behind the scenes. And you have the interest rate charged to the final borrower in SCF1 and SCF3 was fixed at 10% per annum. Perhaps now you have a different arrangement. SCF1 was popular with PFIs, that is participating financial institutions, because the level of government subsidy was high, 50% of both the cost of funds and the credit risk, and the effective interest rate earned by PFIs on their 50% contribution was 20%. Now, the argument just which I was advancing to George is still the same. How exclusively different is this loaning scheme really from other loaning schemes, especially by commercial banks? Because you're using the same commercial banks, you're using an interest rate system to actually gain from this farmer that you're seeking to help, which is paradoxical in essence, really, when you look at it. How different?
I'll explain to you, Baldwins. Thank you very much. The exclusivity of the SCF is entailed in the fact that it is a risk-sharing mechanism. It is a refinance scheme. All right? And it was established on a public-private partnership approach with risk sharing embedded in there. I don't want to go in about the partners because we've already mentioned them. The government of Uganda, the PFIs, and these PFIs we're talking about institutions regulated by the Bank of Uganda. Basically the commercial banks, the tier 1 institutions, tier 2, micro deposit taking and credit institutions, and the Uganda Development Bank. And another factor is the memorandum of agreement, which is governing the operations of this scheme. The recent one is MOA 2018, like you had in the brief. And it happens that this MOA is actually signed by all the partners in the arrangement. Government of Uganda is represented by the Minister of Finance, Bank of Uganda were the fund administrators, okay? And in the risk-sharing arrangement, another exclusivity is whereby we have for any one sub-loan to the final borrower, we are sharing. For the category UDBL and commercial banks, okay? They will contribute 50%. Government will come in with 50%. So it's a 50-50.
So this extension of the loan is in response to the need of the client.
The farmer, the end borrower.
The farmer needs about 1 billion shillings.
Yes.
And so
50-50.
Okay.
For the category commercial banks and UDBL. Now for the category MDIs, micro deposit taking institutions and the credit institutions, for that category they will contribute 30% to the sub-loan going to the final borrower. And government will match it up with 70%. That's the beauty, that's the exclusivity we are talking about. And then the fact that it's a refinance scheme. We are saying it all starts with the PFI.
What do you mean refinance scheme?
I'm coming to that, and I'm saying that this refinance arrangement, it all starts with the PFI. You, Baldwin, if you're a client, you want an SCF loan. You take your loan application to your bankers, the ones we're referring to as PFIs. So you take your loan application there. The PFI will undertake their due diligence to establish whether your project is viable, and they'll go ahead and finance you up to 100%. Now, after that, they in turn, the PFI, in turn will come to Bank of Uganda seeking for what we call reimbursement refinance in the proportions I've just mentioned. So you find that the other exclusivity is the terms and conditions that are favorable favorable terms and conditions. We're talking about that interest rate, 12% per annum or 1% per month. You won't find that anywhere in the market. This is the cheapest. We're not saying it's the best, but it's the cheapest in the market to date. We are talking about favorable loan durations, okay? It is minimum 6 months, maximum 8 years. You're not going to find that anywhere else. And then we are factoring in the grace period, okay, whereby you don't have to, as a borrower, you don't have to pay principal repayments in the installments. But at least we give you grace period up to 3 years. And this you negotiate with your bankers, depending on your agricultural value chain. Now, you find that the PFIs ordinarily, they lend up to 100%. And they have to bear the burden of default, again up to 100%, which makes it expensive for them. So this arrangement is really to make it conducive for them, to incentivize them to on-lend towards agriculture. We are telling them you didn't come just to make money, profits, and then, you know, you have to be part and parcel of the economic development of this country by ensuring that you finance the agriculture sector.
Okay, pretty good defense. I didn't hear also from John how he accentuates your defense, because based on the report that you just issued about SEF 2019, cumulatively, you've so far remitted 141.9 billion Uganda shillings. That is from 2009 up to now to the Bank of Uganda's escrow account, and of which 212 million was disbursed in financial year 2018-2019. Half year, the cumulative total disbursements by Government of Uganda PFIs is 492 loan applications out of the 647 loan applications received amount. So with all this money, the billions, actually somebody who is watching me interviewing, they think that you're getting me a billion when I get off the show here. Yes. So the success story of this whole facility.
I think one of the things I want to emphasize is I always give the comparative so that people can get it clearly. Joanita said the issue of duration. The average duration in the market is 60 months. We are talking about 96 months. So I think people need to appreciate that over and above the interest rate that is low, we also have one of the longest durations. And actually that speaks to one of the objectives why it was set up. It was set up to move the financing from the short end of the market to push it further upfield, because that's why you are saying it's 96 months. On average, the market will give you 60 months at best. If you're really good at negotiating, 72 months. So government took a deliberate effort to say some of the agricultural projects actually in the medium and long-term frame. So let's push this towards the long-term frame. So to me, that has been one of the successes. That one of the successes has been to push out the lending. Actually, when the SEF came in, we've seen that even the 72 months was not common in the market. It's a 6-year cycle for the normal commercial loans. But once the SCF came out and people tested that you can actually lend money for 96 months, we started seeing a number of other loans coming in with 72 months. The other thing that we've also seen, increasingly, colleagues in the supervised financial institutions, what we've called the participating financial institutions, actually didn't have agricultural departments. Now, one of the things you'll see in most of these banks, we are starting to see fully fledged agriculture departments focused on agricultural lending. To me, that's a very big plus. Why is it a plus? People are starting to recognize that we are putting our money where our mouth is. Because we say agriculture is the backbone of this economy. But for the longest time, there was a delink between the financing and the actual practice. But now we are starting to see that banks have recognized that agriculture has a number of bankable projects. Of course, the other thing that we've seen is the innovations that have emanated from that. because once you are extending funds, you will need some risk mitigation measures. Now we have agriculture insurance was not fully developed in this country. We are starting to see a lot of development taking course in that space. We have now, like, I think 3 products of agriculture insurance in that space, exactly aimed at providing a mitigation measure for some of these problems that we encounter in agriculture. But agriculture insurance was more or less a non-starter 10 years back. Okay, so we've also seen a number of products. Some of these products we used to take for granted are now being packed and actually processed. So the so many billions you've talked about have actually translated into products. And I'd like to assure Ugandans that as the SCF or as the MOA is being revised, of course we are going to get to the last one. We are moving to the last mile. But when we started out, one of the objectives was to promote commercialization and modernization of agriculture. You don't promote commercialization and modernization of agriculture by first looking at the guy who has only 0.5 acres. A guy who has probably 0.2 acres. You first look at the guys who are really big. So when you see this scheme, initially we came in from the aspect of mechanization. That's why we are looking at how do we forestall the post-harvest handling losses. Can we get guys some storage facilities? Can we get guys some of these combined harvesters so that they can harvest as fast as possible and they don't lose their produce? Can we get some of these things that open up the field so that a guy can produce, plant sufficient acreage? So all these things were intended towards achieving the objectives which were set out, basically commercialize agriculture, promote food security, and ultimately when all this happens, we should be able to see that Ugandans' incomes increase and then poverty will be reduced down the road.
Okay.
Yeah.
And it's understandable, of course, and you got 76% of fulfillment of those applications that were made. Now, Juanita, you have, because I'm still on that particular aspect of the commercial bank approach on getting to have this intervention, and you have collateral requirements under that particular facility require that the primary security for the credit facilities is the machinery and equipment financed where applicable and any other marketable securities, which of course will include land titles. The PFIs shall ensure that the loan is adequately secured as per their credit policy to protect their interest and that of Bank of Uganda, implying that actually at the point of any loss or perhaps of defect or failure to pay, the farmer loses, and usually there is even a propensity or perhaps the consequence of having their land, which is their last line of defense for assetization. So isn't the securitization or collateralization approach in this credit facility program eventually targeting the land of the people, and eventually it's going to impoverish the very people you're trying to help?
Okay, thank you. Thank you, Baldwins. I like your question, impoverishing the farmers with their little...
Yes, because the person has a land piece, and definitely if you're collateralizing this whole facility and with the risk embedded in this particular whole industry, likely they're going to lose their land, and it's a big problem.
Okay, thank you very much. Now, this issue of securitization and collateralization of the SF loans does not necessarily focus on traditional collateral. It doesn't. Whereby you're talking about land titles, you're talking about mortgaged properties. No. In the category of medium to long-term borrowers, ordinarily they require large sums of money, and the financial institutions, the PFIs, will definitely require some collateral, traditional collateral, for the huge sums of money the borrowers are looking for. And this traditional collateral, they'll be looking at recent valuations of those pledged securities. Are we together? So they are trying to ascertain to themselves that they have adequate security cover for their monies. All right? Now, on the part of the small micro borrowers, where most Ugandan farmers fall, in this category, there was the issue of our memorandum of agreement 2018, operationalizing what we refer to as the block allocation. Block allocation. Now, under this block allocation, we are basically trying to see that credit is unlocked to these small micro borrowers. And we are looking at one participating financial institution submitting that one application, that block application, not exceeding 1.5 billion Uganda shillings. But therein, that one application, there is a multiple series of small borrowers. 1 million, 2 million, 5 million, we've given them, but not exceeding 20 million for that one application in the block
the
allocation.
The cap, the ceiling for
is
the
20 million, 20 million within that block allocation. So you find a multiple of them, but with an application not exceeding 20 million. So now under this arrangement, this block allocation arrangement, that financing does not require the traditional collateral. It doesn't. It actually gets out of the box, and it is the banks are considering what we refer to as excuse me, what we refer to as alternative collateral arrangements. What are these? The PFI can look at the cash flows of the project for the small borrower, as in, is this borrower...
So you're talking about, I have about 10 cows, cattle. I want to expand my cattle rearing project to about 30 cows. So that's what you're looking at, the cash flow from those 10 cows to make
exactly, cash flow, because remember, you're going to get a commercial loan which has to be paid back, but at concessional terms. And we are saying that that PFI can look at your cash flow and establish, is this project viable? Does this project have the capacity to service
on what
the loan?
grounds? Because I'm not understanding. I doubt whether this. At least I don't expect that these smallholder farmers are having an account banking system whereby they keep on depositing, unless that's the precondition. Is that a precondition? That you have a banking account? You
have to have a bank account, because you're going to go through these participating financial institutions.
Okay.
So that bank will look at your small application. They'll work out some numbers, your expenses, your revenues, and then see whether you have some cash balance and whether you have the capacity to service the loan. So that is the cash flow basis. They'll look at another alternative collateral arrangement, excuse me, like your bank balances. Do you have anything on your... I mean, if you're zero, you can't start zero and you want to go to 10 million. You better start from somewhere. Then they can also look at your savings potential. They can look at your credit reference CRB report for the serial borrowers. They'll look at your CRB reports. They'll look at shuttle mortgages, even this chair table, group lending, They'll look at shuttle mortgages. They'll look at warehousing receipt.
Look at my television at home.
Exactly. They'll look at warehousing receipt system. They'll look at contract farming, especially with off-taker arrangements. So this is with the intention of easing collateral on the part of the micro, small borrowers. So I like your question where you talk about you want to take the little. No, we're not in that business of taking the little from the farmers. We're not in that business. If anything, the block allocation is trying to embrace these farmers, to embrace them, unlock that small credit to them, and then give them the opportunity to migrate from subsistence farming to commercialized farming. So we're trying our best. And actually, by June 2019, that period, June 30th, 2019, we had disbursed close to 540 million to these small projects.
Yes, the one of block.
Yes.
Okay.
Yeah,
so
and they're servicing well. They're servicing well. They're paying well. So the issue is not that they can't pay back. No, they have to pay back so that the money can benefit the next viable
I want to
project.
ask about the prospect that they're not able to pay,
No,
and then
pay.
you come and take away their TVs.
No.
Let me go for a break.
They're paying.
Let me go for a break, and George,
Yes.
you will help, just because there's an emphasis in this website about grain trading business. It's very suspicious why you're concentrating on this a little bit more. So our viewers, let me go for a short break. We'll be right back, and then we'll conclude this discussion.
I saw the end of the election period. I saw days towards it up to the end. You guys should pray about it.
A time comes when you start waking up and you start realizing that there are higher influences in the realm of the spirit, and to acknowledge that you're not merely physical.
There is not any man, prophet, psychic, whatever you may call them, that has stood in front of masses and has been that detailed and that specific about things year in, year out, and you have seen them before you.
Prophet Elvis Mbonye, the prophet with an unmatched record of prophetic fulfillments.
Coming soon on NTV. A family devastated.
Sana, di na lang kita niligtas. Dahil sa'yo, namatay sila mama at papa.
Siblings separated.
Julian, pipilin kasi halimo ka. Isama niyo na lang po ako. Ate!
Ayos ka lang, bata.
Tulungan niyo po ako.
Ikaw na si Samantha del Mundo. I want you to meet Governor Salvador del Mundo.
Hindi ko po kayo balik sa ampunan.
Sige, Pilipino, may aksidente po kasi nangyari po dito. Pwede mo kayo pumunta?
Pag natanggap akong caregiver sa Amerika, hindi ka na mamamasada nun.
Please give a round of applause. Jewelry designer, the star, Samantha del Mundo.
I like you, Anna. To be honest, I think I love you. Anna's my girlfriend.
The love that makes her whole
Pagkatapos ng party na to, wala nang mukhang iyaharap ang babaeng.
will ultimately destroy her.
I still love him so much. At wala akong balak na isuko siya.
The heart is the deadliest weapon.
Nayaan ang patayin nila ako.
Coming soon on NTV.
Thanks our viewers for keeping with us. Coming to you live from the Campus International Conference Center and Karagara Boardings. And we posted another question just as we're concluding this discussion, asking for your advice. If you feel a bit skeptical about how this particular project is run, what is your advice? So I can see Mwongechas, he says that I think the government should first do a thorough needs assessment to understand the facts on the ground. There is need to revive cooperatives and channel monies through these cooperatives, and SACCOs would be more accessible than the commercial banks. And quite comprehensive recommendations here. Lastly, Humza when Silas, he says that the government should first sensitize these farmers about these credit schemes, and money should be directed to farmer groups, not commercial banks. Money should be direct to farmers, not because these banks are profit-minded and their process are complicated to most farmers. And please keep having this particular conversation flow. And George, definitely in reference to the because the response is about how they are recommending. And in this facility, you've now gotten a bit of full-fledged engagement into grain trading. And I can see the concept is indicating that the scheme shall also provide financing for working capital and infrastructure for projects engaged in grain trading. Terms will be as follows. The maximum financeable amount to a single borrower and related parties is Uganda shillings 10 billion. Wow, that sounds huge money. However, this limit can be lifted on a case-by-case basis for eligible projects that add significant value to the agriculture sector. So, of course, in reflection, if there's anything you want to respond to those particular comments, why this emphasis on grain trading?
I think one of the quick things I can give to the social media person who tuned in via social media is the fact that we have to appreciate that we come from a history of government credit facilities that stretches to before independence. So that has informed the way we've structured this particular one. If people can remember just a few years back before the SCF came in, there had been a number of government credit facilities that had been channeled to the same people they are telling us to channel the money to.
Rather than through
and indeed, the default rate was way higher. Unlike the SCF, where the default rate is 0.1% compared to the national average of non-performing loans, that is 3.6% as at June 2019. So you can see that the mechanism we've taken, the mechanism of ensuring that we have a thorough credit worthiness check before we actually extend government resources, has reaped a lot of dividends for government. Because a 0.1 default rate is really very low. So, I mean, there are good points he has made. Coordination, further coordination via circles and other formations in that manner. That's excellent. And I mean, that's the way government policy has been moving, to emphasize circles, and our colleagues in Uganda Microfinance Regulatory Authority are also into that space to ensure that circles function to help the people. To come back to the issue of the grain facility, why are we interested in grain facility? I will go back to the objectives. One of the objectives of the SCF was food security. And increasingly, most of us actually rely on grain for our food consumption. Maize, sorghum, millet, mention it. Most of us are into consumption of those for food purposes. So if government does not pay attention to the food which its citizens eat, then it wouldn't be a fair game. So one of the reasons why we set up the grain facility was to ensure that the post-harvest handling losses that were occurring in that space, most especially during periods of bumper harvest, are actually contained. And you'll see that facility was set up in such a manner that you pay back 15% and it's payable within 24 months. Because our understanding is you've bought this grain from the farmers, kept it in the silos or processed it, and you've sold it to the next user. So by that time you should actually have recouped the money and repaid the loan. So really the essence of the grain facility was to forestall any losses we are suffering in post-harvest handling of those grains, and because now increasingly our food security relies on those grains or cereals, which are actually the backbone of what most people consume in this country. Yeah.
So of course the suspicion on us who are skeptical, the suspicion is that this is an easier ground. The grain has been taken out of the field.
Yes.
but you've done a good explanation of that. And Jonita, just in follow-up of that. And I'm actually taking you a little bit back on the ordinary farmer, because under SCF1, almost all funds available were fully utilized, as we've been talking, enabling loans of 58.6 billion to be made to final borrowers. However, the 2017 BOU SCF report indicates that the loans extended under the SCF have mainly been extended to larger commercial farmers, because if you're saying initially, which was for the purpose of ensuring that you start with those who have the potential to commercialize, it can't still be that 2017 was still suffering the same. That almost 70% of the credit dispersed under SCF to date has gone to large borrowers with loans of Uganda shillings 2 billion or above. That is a report of 2017. Perhaps the current one gives it. So why aren't you attracting enough credit-seeking response from farmers towards this facility, to the point that over 90 billion a year is unabsorbed? Actually, absorption, you have an absorption problem.
Okay. I like your questions, Baldwin's. Thank you. But It is not really true that currently we are facing low absorption. It may have been...
Of course, it's a 2017 report, so
exactly.
You might be right. By the
now we're in 2019.
Yes.
So we can't be talking past, we're in present. So, yes, we know that there are some eligible farmers. They're eligible. And they would want to access the funding through the PFIs. But then you find that they don't have those requisite, records.
Okay.
Now we're talking about the record keeping.
Okay, yes.
They don't have the requisite records.
Basis on which to...
The basis on which the PFIs can undertake their due diligence and establish viability of the project. That is one thing. The farmer is eligible, but does not have that adequate information or records keeping. May not have, or if they have, it is inadequate. It is not to the satisfaction of the lender, the PFI. So that is a major problem, and that's where the issues of financial literacy, even via Bank of Uganda, they're very, very critical to get the farmer on track and enable them to be attractive to the lenders, the financial institutions. Then another thing is that, of course, since inception of the scheme, it was the sensitization, the publicity was not as much then, okay? But now we have tried to make sure that these credit-seeking farmers out there, they get the information. And what have we done in due course? Thank God, with the financing from the Minister of Finance, okay, and our development partners like GIZ, we received some money to implement the ACF marketing strategy, whereby we create awareness, we sensitize the public about the availability of these funds.
Yeah, and I think this platform is also...
this is one of them. Thank you very much, NTV. So it has enabled us to go with the funding, to step out there aggressively, traverse the country, blowing the message, blowing the trumpet about the availability of these funds, because they're for all Ugandans, provided you have a viable project in primary agriculture production, in agro-processing with the value addition, and the grain trade. And then you see that with this aggressive marketing, the uptake of the scheme funds has actually gone up. The curve in the last 3 years has been going up to the extent that cumulatively by June 2019 we had disbursed amounts totaling about 350 billion. You were talking about 2017,
but of course, because that's the
now we're talking about June.
Access to, and,
you should have asked me for the recent information about it. So the thing is, to date, cumulatively, as at June 2019, we had gone up to 350 billion. I even have the figures. One time it was about 29 billion, 2017, 28 billion yearly figures. But cumulatively, June 2019, we had only lent 350 billion to 592 eligible projects in the agriculture sector. And government has made a contribution of about 177 billion. We also have committed funds, okay? Totaling about 40 billion. And this is for the projects that were approved, but they have to fill some pre-disbursement conditionalities. So we're moving. Repayments, so far we have received about, as at June 2019, 113.7 billion has been repaid back. Okay? It has been repaid back. Our NPL is less than 1%, okay? The lowest in the agricultural sector.
NPL, non-performing loan.
And we need the reflows to come back. You can see government has injected to date 141 billion. But I've just mentioned to you, we have on lent 350 billion. Okay. So that difference, what happens? The reflows we get, the repayments that we get back, those are reflows. We further on lend them to other viable projects in the agriculture sector.
Okay, and
now you said we have idle funds. I want to mention that
yes,
we do not have any idle funds.
That was a report indicated in 2017. So
I'll give you the status quo, Baldwin's.
Yes, the current one
we don't have idle funds.
Okay,
and this is evidenced by the increase in the uptake of the scheme funds. Okay. In fact, Bank of Uganda will have a portfolio that is that big.
Okay.
So the marketing has been aggressive, the message has gone out, the demand has increased. Applications, there's an avalanche of applications in the Bank of Uganda.
Okay.
To the extent that we are in conversation with the Minister of Finance to step up the capitalization of the scheme so that it can continue to meet its intended objectives of commercializing, modernization, mechanization of agriculture by facilitating the provision of medium to long-term loans, at concessionary terms.
Okay, good defense, passionate indeed. And
thank you.
So let's wrap it up this way, George, with an undertaking on how you're dealing with the challenges. And Jonita, I hope you don't go to dispute this fact, because this is from the report, your very report, 2018-2019.
Yes.
Okay. It says that challenges first. There's loss of government funds through poor scrutiny of proposals resulting in an increasing number of delinquent loans. The number of delinquent loans had increased from 6, totaling Uganda shillings 2.1 billion by 30th June 2014, but by 30th June 2018 there were 3.1 billion. And the Bank of Uganda lacks an annual work plan and targets for ACF, which made tracking performance difficult. And this is the report among the challenges. I hope you're not disputing that. So how are you dealing? Pardon?
I'm listening.
So as we're wrapping up, how are you dealing with these particular challenges and how? No, I think Joanita did bring it out earlier, and that's exactly the reason why we went out for the credit policies of commercial banks. That yes, that's 3.1 relative to 350. So that's why we're telling you, in terms of non-performing loans, we're actually below 1% or around 0.1%. But one of the things we've done and why we've stepped up and told the banks, you need to stick to your stringent credit policy, because one of the things you'll see that stringent credit policy ensures that we don't get some of the people who are not fit crossing into obtaining the loan. So, and also the other thing is the fact that, and she brought it out at the start, that this is a risk-sharing partnership. This is not only government money. Because it's a private-public partnership, there are resources for commercial banks and credit institutions. So they also have a stake. So they cannot actually throw away their own money. So that's why that middle ground is very important. And increasingly, we are also not seated and simply looking at the supply side to say, commercial banks, do your stuff, we shall let you be. One of the things we've done, we've appreciated that one of the problems is that there is some kind of financial illiteracy on the side of the borrowers. So we've moved into that space, and we have clinics, I'll use the word for the medical doctors, clinics for these people so that they can appreciate what is it to manage your own money. Once you figure that out, and once you figure out how to manage your own money, then it becomes easy to manage funds that you've actually been lent by a financial institution. So it's a two-pronged approach. We are saying on the supply side, stick to your stringent credit policy, so that you weed out whoever does not qualify. Okay? Of course, that has implications that probably the farmer who is at the last mile might not be able to get in. But it also has a benefit that you don't throw away government money to people who will not be able to pay back. So that's the supply side. On the demand side, we've also started to say there is a problem of financial literacy which we need to deal with as a country. And we've actually moved into that space, both with the Ministry of Finance. They have a project called Profida. We've been to districts, all districts, training their commercial officers, training their community officers, so that they can be able to take this information to the farmer. So we believe that with that two-pronged approach, we should be able to get where we want probably in the next so many, probably 5-10 years. Yeah.
Okay, Dr. Jonathan, I can see how you would really burning with the point you made, but we've run out of time. Can you just use 30 seconds to encourage perhaps a skeptical farmer or someone who feels a bit inhibited to participate in this, just to come and be part of this? Just 30 seconds, please.
Farmer out there, you should come and benefit from this agriculture credit facility. Why? It has the favorable concessional terms and conditions that you will not find obtainable from, the financial sector elsewhere in the financial sector. So just come and get the facility. If you have a viable project, approach your banker. Farmer, agro-processor, grain trader, approach your banker. No, we are equipping you by giving you the information, so that information is power. So that when you match confidently in that financial institution. Present your case when you know what you want. Because if you don't know what you want, that other person will take advantage of your ignorance. So when you know, you are informed, you are equipped, you are empowered, say, I want the ACF money at 12% or lower, I want the long-term loan durations, please don't give me in that particular value chain at shorter loan duration, and I want to benefit from the grace period. So come and benefit from these favorable terms and conditions that are well stipulated under the ACF, and it's for the benefit of all Ugandans. We don't have any favoritism.
All right, no preferring who to give.
No.
Thanks, Juanita, and indeed on that note, Juanita Babumba, Head Agricultural Credit Facility. Great job you're doing, definitely, with some issues that need to be a bit dealt with. And Dr. George Sonko, Head Financial Consumer Empowerment, Bank of Uganda, and I believe I'm going to get a video. Thanks indeed for an incredible contribution towards this conversation about this society. I believe somebody who's watching has incredibly gained from the availability of this particular finance. Our viewers, very grateful for keeping us as your number one station. I'm Karaga Bodwins, and please keep locked on to TV. And if you're there as maybe a ministry or a department or an agency or an NGO, and you want to have a discussion that is comprehensively structured to the betterment of our nation, come talk to us, talk to our sales team or myself, and we'll have this done in a very beautiful and exciting manner. God bless. Great night.